Welcome back. You're watching The Money Show, and it's time to get your portfolio queries checked by Anurati Private Wealth Deputy CEO Feroz Aziz. Feroz, good evening. Welcome to the show. And we have the first question for you ready, which is from Mr. D.S. Reddy. And he says that he wants to invest 15,000 for 15 to 20 years. And he wants you to suggest funds for this particular time period.
Yes. So if you look at it, Kavita, firstly, I'm very impressed with the time frames which Mr. Reddy wants to have for his investment. So 15,000 rupees for him to continue on a path for some period like 20 years. It's important to keep the end point in mind. If he does invest for 15,000 rupees for 20 years, and if it grows at about 14%, which I think is a fair assumption given his time frames, he would get to close to 2 crores, kind of a corpus. Now coming to the funds, I would like to give funds from different categories of all equity schemes, because 20 years is long periods where your capital doesn't get hampered for those kind of periods, especially when you're going to be investing in small portions on a monthly basis. So SBI large cap, Kotak emerging equities, DSP small cap, Aditya Birla small cap, HDFC Focus 30, SBI Contra, HDFC Flexi Cap, and Canara Robeco Flexi Cap. So he will have almost about 5 categories of equity schemes across 8 different equity schemes, which will imply that he will have close to 290 stocks in his portfolio.
All right, we move on to our next query, which is from Venkat. He is investing in ABSL Balance 95, ABSL Tax Saving 96 fund. These funds have been underperforming. He wants to understand if he should hold on to these funds or just make an exit. And he also wants to invest somewhere for 5+ years time horizon, Feroz. So what should be the fund selection?
See, I think firstly, Venkat, there's not too much sense to have 2 schemes, both of them from the same asset management company, assuming that you don't have any further schemes. So Aditya Birla, both the schemes being from Aditya Birla, I would not vouch for that. Of course, one of them is an ELSS scheme. The other one is a hybrid scheme. So ELSS only if it's giving you a tax benefit doesn't make any sense. Hybrid schemes, you pay a larger fee even on the debt component, which does not make too much sense. So I'll give you rest of the schemes, Quant Tax Plan, to make sure that you have an ELSS scheme in your portfolio, SBI Large and Mid Cap, Kotak Emerging Equities, DSP Small Cap, Aditya Birla Small Cap. If you have some affinity towards Aditya Birla, then the small cap fund from their basket seems to be very well poised to further perform. HDFC Focus 30, SBI Contra, and HDFC Flexi Cap could be good schemes, not just for your SIP amounts, but also for your lump sum amounts. If you want some debt component, IDFC Gilt Index Fund of 2027 is a good paper to buy.
All right, we move on to Sanjay Talreja's question. And he's a gig worker. He's working with IT firms, and he has sold off a property and received close to 40 lakhs. He wants a suggestion in mutual funds to invest for decent returns.
Great. So if you have inconsistent revenue streams, it becomes very crucial for you to get some recurring income as well from a property sale. But if you've sold a property, it's very important to see whether any Section 54F or Section 54 is applicable for any other long-term capital gains or for the long-term capital gains which you would have got, and the indexation and the computation is very critical. So spend some time on your taxation of the property sale. Now coming to the part of where could you invest, I would suggest that you invest in the similar equity funds which were suggested, because when at Anand Rathi we choose mutual funds, we have futuristic mindset, which implies that you can have something which is not performed too well, but is expected to perform better in the future, because mutual funds, especially the equity side, are cyclical. So it's not necessarily the funds which did very well in the past is who will do very well in the future. So the same schemes which we had recommended to the previous investors on the equity side, I would like you to look at it. Coming on the debt side, I think IDFC CRISIL Gilt 2027 Index Fund and Aditya Birla Sun Life Gilt April 2026 are the 2 target maturity funds which can bring you stability, especially when you're selling equity real estate to come into financial instruments. A certain degree of instruments being debt makes so much sense from the risk management standpoint.